And welcome to the video lesson on why consider trading now. We work hard for our money, and at some point in our lives we try to find the most efficient way to make our money work for us. When it comes to investing, most people think in terms of traditional buy and hold approach, but if anything we learned in the last 10-15 years, this approach is a daydream. It's a nonsense for three main reasons. One, it's ineffective. Two, it's very risky. And three, it's unrealistic. Just look at this annual stock market returns for the last 10 years. The market was basically flat for the last 10 years, and at best you would get maybe like 1% of annual returns. And with inflation 2.5% in the last 10 years, stock market returns were actually negative. Now look at the this chart of the Nasdaq index, which tracks the performance of the biggest technology company in the United States. It's even more pathetic. At the worst point, the market lost about 80% of its value, and now after 12 years, this index is about 50% down from its peak in March 2000. So, and we're not talking about here about the collapse of one or two companies like Enron or Global Crossing or Lehman Brothers. We're witnessing here the capital market collapse of the whole sector of the economy, which is the technology, which was promoted by the mainstream media and financial advisory industry as a way to the future. So investing, is it a great idea or illusion? Well, the proponents of the long-term approach tell us that we should not worry about what happened in the last 10-15 years. They give us this argument. They tell us that over the last 82 years, the market returned 6.1%. And if we're not happy with this 6.1%, they tell us that over the last 216 years, the market would have returned even more, 6.5%. And I'm not making these numbers up. These are my sources, a book by John Bogle. He's considered to be the father of the index mutual funds industry. He is the founder of the Vanguard 500 mutual fund. To sum it up, I can say that they offer us a mediocre return in exchange of a huge risk and ridiculous waiting time. Now, what are the options? Yeah, putting money under the mattress comes to mind, or CDs or money market options could be another possibility. But with CDs giving us less than 1% of annual return, we won't be able even to keep up with inflation. But luckily for us, there is an alternative. And it's called trading, or timing the markets. So what is trading? Trading is buying and selling securities or commodities on a short-term basis, hoping to make quick profits. And again, the key word here is short-term approach. There are 5 main advantages of trading. 1, non-correlated returns. 2, flexibility. 3, potential for enormous payoff. 4, instant gratification. And 5th, risk control. Let's go over these advantages in detail. So number one, non-correlated returns. What does it mean? Well, basically it means that trader performance does not depend on overall market performance. For example, if the general market is up, trader performance could be down. Or if the general market is down, trader performance could be up. Why so? The reasons for this is because trading is a skill, like tennis or like poker, and trader's return is dependent on his or her skills. Another advantage of trading is flexibility. You can make money in up and down markets. And any moment of time you have three choices. You can go long, go short, or do nothing. A quick terminology clarification here. When we say go long, we mean that we're making a bet that markets will go up. And when we say we go short, we're making a bet that the market will go down. So when we go long, we profit from buying low and selling high if our forecast is right. And obviously, if our forecast is wrong, we lose. And when we go short, the process is reversed. It's surprising that the general public, by and large, is unaware of shorting strategies. Average Joes out there do not understand that it's possible to make money in down markets. So personally, 2008 was my best year with 40% return versus market loss of about 40%. Another big advantage is that the payoff of trading could be enormous. Best traders in this business achieve over 100% return year after year. The kind of returns that even investing idols like Warren Buffett can only dream about. Another advantage of trading is instant gratification. You can bang out $50 or $50,000, depending, of course, on capital size, in a relatively short period of time, 2 or 3 minutes, and wire money the same day and enjoy the fruits of your labor. For example, other jobs, you have to wait for weekly checks or until customer pays you. Market usually either pays you or punishes you in a relatively short period of time. But the biggest advantage of trading is a possibility of a risk control. When you invest, you just hope that things will turn out positively. But trader always use a professional trader always use a risk control. In other words, he decides first how much money he might lose if his forecast is wrong. And it's important not to confuse trading with the gambling. Good trader can be compared to casino owner with probabilities and statistical edges on his or her side. Before you rush and ask, where do I sign up? A few words about disadvantages of trading. You actually have to work, and you got to know what you're doing, and the learning curve is kind of steep. That means you have to have a solid understanding of risk control, position size, and trading system development before you can make any money in this profession. So here's a warning: don't even think about live trading without risk control systems in place. I like to say that trading is the hardest way to make easy. So the bottom line here is that I believe that trading is much better alternative to traditional buy and hold investing for those who want more control over the money. and for those who want potential of high returns with risk under control, and for those who are willing to take necessary steps to become a professional trader.